money doesn't really destroy families, but lack of preparation does. And you can build the perfect plan, but if your heirs don't understand money, they don't understand your values, they don't know how to manage wealth, then that plan is probably going to fail like it did for the Vanderbilts. Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larsen. Today, I'm going to be talking about Chapter 5, From Financial Freedom to Generational Wealth, from our new book, How to Be Financially Free by 40. And this is my favorite chapter because you've done the hard work. If you've been working through each of the steps through each of our successive chapters, you've built a high-income career business. You've developed a true tax-saving strategy that's automated. You've optimized your tax strategy so you're saving and investing more after taxes. You set up your family's insurance and estate, not only for protection, but also for legacy wealth creation. And you're either financially independent or well on your way, and you're now investing for cash flow and freedom, not just net worth. And the good news is you're 90% of the way there already. If you're like most of our clients and investors, you're the first in your family to achieve true financial abundance. And if you're like me, you're not just doing it for yourself. You want to create a foundation so your family can maintain the wealth you've grown, continue to grow the wealth, and make an impact far beyond your life. You want to create a system for your family to continue to grow what you've built. And this is where we shift from building wealth to really designing legacy with a new goal on permanent wealth. And really up until this point, the focus has been on your income, your savings, your investing in your cash flow. But once you're financially free, the focus becomes what happens to this wealth after you're gone. Not only do you want to use your financial freedom to make an impact today, but can you use it to help your family continue to make an impact? Because if you do not have a plan, your wealth dissipates, your taxes erode value, the family can lose direction, or there can be infighting. And you've probably heard the saying or the statistic, shirt sleeves to shirt sleeves in 3 generations. I live 2 miles from the Biltmore estate here in Asheville, and the Vanderbilts are one of these cautionary tales in that exact scenario. 3 generations, not a millionaire in the family. And that's not a money problem, it's a structure and an education problem. You want to have an estate that's efficient versus just a size of the estate that makes sense. You want it to continue to be able to grow. And a lot of people, they don't know because this is their first time growing wealth. Wealthy families focus on how much of that estate actually transfers because it's not just what you build, it's what your family keeps. Just like it's not what you earn, it's what you keep after taxes. So I want you to consider the hidden risk of your taxes at your death, because without proper planning, your estate taxes, your capital gains taxes, liquidity issues, they can significantly reduce what passes to your heirs. And that's why I mentioned estate efficiency is more important than estate size. So there's a few things in this equation that you want to consider. One is the step up in basis, which is really one of the ultimate wealth transfer tools. It's very powerful and it can be underappreciated because the step up basis works when you pass away, your assets are stepped up to their current value. So if you've bought a piece of property for $500,000 and after decades it's worth, say, $3 million, your heirs inherit that property at the new stepped up basis. That means they could sell it the next day and they don't pay any capital gains tax at all. So that means those decades of appreciation can pass on to your heirs with little to no tax liability. And this is a very powerful strategy because you really never want to sell if you can help it. You want to allow your wealth to continue to compound and then transfer efficiently. So instead of selling assets, paying taxes, and starting over, you hold assets, you generate income, you let them appreciate, and you pass them on tax efficiently. This is where the swap till you drop strategy comes into play. And this builds directly on what we've talked about in the prior 2 chapters. Buy, improve, refinance or 1031 exchange, repeat, hold, and pass on those assets to your heirs. So let's walk through this step by step. You acquire assets, typically real estate or businesses. You improve them and you grow their income. You refinance them, refinance those properties to pull your equity out instead of selling them, or you do a 1031 exchange to defer the taxes. Then you continue the compounding, you hold until death, and then you transfer with a stepped up basis. What does that get you? It gets you deferred taxes, it gets you eliminated taxes at death, and it maximizes the capital that you preserve for your heirs. And this is one of the core strategies used by wealthy families to build and transfer wealth across generations. The next big one, I've talked about this multiple times on our podcast. We've got lots of webinars on it. You can see it at our banking page at nextlevelincome.com/banking is your family bank that we talked about in chapter 3. Cash value life insurance creates liquidity, but even bigger, it creates legacy. And it's a strategy. And this is why life insurance matters in legacy planning. So if you haven't looked at it, I encourage you to go back and reread chapter 3 and see if you have the proper insurance strategy set up with your estate. Because one of the things that families face when they are planning their estates or after death is the liquid assets. So if you have real estate or business that needs to be split between heirs, this can create a big problem. What if you have estate taxes that need to be paid because you've pushed past the limit on the estate tax limit, and you need to pay those taxes? Your estate needs to pay those taxes. Life insurance can step in and pay the taxes so you don't have to sell off your business or your real estate that your heirs have now inherited. Also, unequal distributions. Maybe you have a child that's running your business and they want to keep that business, but you want to give a portion of that business, of that wealth, to another member of your family. That's where life insurance can step in there and handle that. Also, it can help with timing issues. So it gives your heirs more flexibility when you have the insurance and that liquid cash that can come in and help in your estate planning and your estate transfer plan. So the key benefits of life insurance, specifically cash value, permanent life insurance, whole life insurance, when you pass away, you get tax deferred growth. Your cash value grows tax deferred, just like equity in real estate or your businesses. You have accessible capital that can be accessed during your life. It can be used for emergencies. It can be used for business funding or loans. It can be used for college. It can be used for purchasing cars. It can be used in multiple different ways. It can even be used for investments. And it has a tax-free death benefit. So that means it passes on to your heirs income tax-free. So if you have a $5 million life insurance policy, they get a $5 million tax-free check. So you can provide liquidity to pay those estate taxes. You can equalize inheritance among the heirs. You can fund trusts or legacy vehicles. This is very powerful when you start holding insurance in trusts and using that trust to purchase more insurance. And it creates guaranteed wealth transfer. So you can guarantee an estate to provide, a legacy to provide to your heirs. So if you look at the bigger picture, we've been talking a lot about real estate, alternative investments, but when you pair insurance with real estate, tax strategy, and estate planning, it really becomes this underlying stabilizing force, this foundation of your ultimate wealth plan, which is how we use it in our family. So, we're talking about some of the different strategies that you can use, but you also have to look at the structure around your estate. And I am not an estate planning attorney, so I'm not going to walk through the specifics today, but this is where you need to work with an estate planning attorney and use tools like trusts, family entities, and these estate plans to really create this structure, because without it, the assets can be mismanaged, the taxes can increase, there can be conflict within family, whereas with the structure, the assets are protected, your intentions are clear, so you can be very clear with your family how you want this wealth to be utilized and guided in the future to grow and be stewarded through that. And that's where education comes in. So, money doesn't really destroy families, but lack of preparation does. And you can build the perfect plan, but if your heirs don't understand money, they don't understand your values, they don't know how to manage wealth, then that plan is probably going to fail like it did for the Vanderbilts. And this is what wealthy families do differently, like the Rockefellers. They educate early, they communicate openly about money, they create a shared vision with their family that's communicated to their heirs, and they treat wealth as a responsibility, not just a resource. And when you do all these things, you create this legacy flywheel. The legacy flywheel has the income that is built, the savings that are automated, your taxes that are optimized, your investments that are cash flowing, your wealth that is compounding, and then your legacy that is structured and transferred. And then your family can continue the cycle. So this is where you step in. You're not just an earner, you're not just an investor. You are a steward of the capital that you've built, and your job is to protect, guide, transfer, and educate your heirs to help them continue to grow and steward that wealth that you're building. You can use chrislarsen.ai to help you with this plan. It's 24/7 coaching that can be out there for you. chrislarsen.ai. You can model different estate scenarios. You can explore different insurance strategies. You can ask chrislarsen.ai about different trust structures and really help educate you and prepare for your conversations with your advisors, because we're not investment advisors. We're not estate planning attorneys. We're not CPAs, but we are here to help educate you on this path that you have, because your goal isn't just to have a plan, it's to really understand it and make sure that your family understands it as well. So just a final thought here as we wrap up. Financial freedom is about your life, but generational wealth is about everything that comes after your life. Your wealth, your legacy can be bigger than just the life that you have. You've already done what most people never will. So now the question is, what will your wealth do for generations to come? So to recap some of the steps, as you go forward, it's important to review your estate plan with your attorney. It's important as you understand how the stepped up basis strategy can impact your plan. If you haven't yet, take a look at life insurance as a legacy tool to see how it fits in, not only for your finances today and in your investment picture, but also as a legacy tool going forward. And make sure that you're looking at trust and entity structures with your attorney so you can start having those conversations and really begin to build this financial foundation for your family. If you need help connecting with estate planning attorneys, insurance advisors, or legacy-focused CPAs, reach out to us. You can go to our website, nextlevelincome.com, and book a free strategy session. You can go back and review any of the chapters in this book, because wherever you are on your journey, you've got a chapter in this book that can help you get there. And that's our goal, is to help you create financial freedom for yourself today and your family, but also help educate your family for future generations to make the biggest impact possible.